That said, none of these alternatives has come close to matching SWIFT's scale, reliability, and universality so far. For those who argue the control thesis, that's itself evidence of just how deeply entrenched the system has become. The other side of the coin, maybe it's just efficiency. Now, let's look at the other side of the coin, because there isn't a single agreed-upon narrative here. Defenders of SWIFT emphasize that the system wasn't designed as a political control tool. Rather, it emerged in the 1970s out of a need for standardization, at a time when interbank messaging was chaotic, slow, and error-prone. Back then, banks communicated via telex. There was no format standard, and mistakes were common. SWIFT emerged as a cooperative that banks built among themselves to solve that chaos, a non-profit structure, governed by its member banks. From this perspective, SWIFT's use in sanctions doesn't stem from the nature of the system itself, but from the national legal systems built on top of it. In other words, control doesn't originate in SWIFT. It originates in government's legal authority over banks. SWIFT is the intermediary compelled to enforce those sanctions, not their designer. Even though it's governed by Belgian law, the centrality of the dollar system means it has to comply with U.S. sanctions, not by choice, but under real legal pressure. The efficiency argument shouldn't be overlooked either. Without SWIFT, international trade would be far slower, more expensive, and riskier. Carrying an average of more than 40 million messages a day, this system has become a practical necessity for the functioning of the global economy. Some economists argue the control narrative overshadows the real benefit the system provides. Surveillance or compliance. The same distinction applies to the question of data collection. Anti-money laundering, AML, and Know Your Customer, KYC regulations in the banking sector already require the monitoring of financial transactions. The fact that SWIFT carries this data doesn't necessarily mean it was designed as a surveillance tool. It may simply be a consequence of an already existing regulatory framework. Following the 2006 scandal, SWIFT put in place stricter oversight mechanisms around data sharing, and formal agreements were reached between Europe and the US. In 1973, in an unremarkable building outside Brussels, one of the world's least known, yet most powerful institutions was born, SWIFT. The Society for Worldwide Interbank Financial Telecommunication. The name sounds technical, even boring. It's presented to us as a messaging protocol, a kind of postal service passing information between banks. But is that really all it is? In this piece, we'll go beyond SWIFT's official narrative and examine how the system evolved into a tool of power and control, who actually holds that power, and why it matters so much in global politics today. We'll also give space to the opposing view, because this topic is far more layered than it first appears. What is SWIFT, really? Let's start with the basics. SWIFT does not transfer money. That's an important distinction. SWIFT is a standardized communication network that carries messages between banks, saying, in effect, transfer this amount from this account to that account. The actual movement of money happens through correspondent banking relationships, central banks, and settlement systems. So how did a mere messaging system become this critical? Because almost all of modern international trade depends on this messaging infrastructure. More than 11,000 financial institutions across over 200 countries use the SWIFT network. Cutting a bank off from SWIFT effectively isolates it from international commerce. This is precisely where the tension begins between the claim of being just a technical messaging protocol and the reality of functioning as a gatekeeper. An infrastructure turned weapon. The claim that SWIFT is a neutral technical infrastructure has been seriously tested over the past 2 decades. One of the starkest examples involves Iran. In 2012, under pressure from the European Union, a number of Iranian banks were removed from the SWIFT network. This wasn't a sanction in the classical military sense. No ships, no soldiers. But its effect, according to some analysts, was not unlike a blockade. Iran's oil revenue dropped sharply, and even food and medicine imports were indirectly hampered, because international payment channels had been choked off. A similar scenario played out for Russia in 2022. Following the war in Ukraine, select Russian banks were removed from SWIFT. That decision was made through the joint political will of the US and European governments. SWIFT itself did not make this decision unilaterally on technical grounds, but it became the mechanism through which the decision was carried out. This is where some analysts and thinkers ask a pointed question. If a neutral messaging system can so easily be turned into a weapon by political decisions, is it really neutral? Or was it, from the very beginning, a control layer determining who gets access to global trade and who doesn't? Centrality and geopolitical power balance SWIFT's headquarters sit in Belgium, but the real balance of power is far more complex. Because a large share of SWIFT transactions are denominated in dollars, the U.S. Treasury Department and U.S. intelligence agencies hold indirect but very real influence. A scandal that surfaced in 2006 revealed that the U.S., citing counterterrorism, had gained access to SWIFT data, known as the Terrorist Finance Tracking Program. It caused major controversy in Europe, since it emerged that European citizens' financial data could be monitored by an intelligence agency outside Europe. For proponents of the control thesis, this episode is a key piece of evidence. In their view, SWIFT isn't just determining who can make payments. It's also a surveillance infrastructure determining who gets watched. Every message leaves a trace: sender, recipient, amount, and timestamp. Those traces become an enormous intelligence resource for actors with the right access, the invisible backbone of dollar. Hegemony. Another important dimension. SWIFT can also be read as a quiet mechanism reinforcing the dollar's status as the world's reserve currency. Since most international trade is invoiced in dollars, much of the traffic flowing through SWIFT is directly or indirectly tied to the dollar system. That, in theory, gives the U.S. the power to monitor, and when necessary, restrict, global trade through its own currency. Some economists and geopolitical analysts argue this is no coincidence, that the financial architecture built after Bretton Woods already anticipated this kind of centrality. In their view, SWIFT is the technical arm of that architecture. The real power lies in the dollar's reserve status and the institutional networks that protect it. Alternative systems and de-dollarization efforts. In response to this perceived control, efforts to build alternative payment systems have accelerated in recent years. Russia's SPFS system, China's CIPS, cross-border interbank payment system, and even Europe's Instex mechanism, built to keep trade with Iran flowing outside of SWIFT, can all be read as responses to this single point of control concern. BRICS countries also periodically raise the idea of building a shared payment infrastructure. The core motivation behind these efforts is straightforward. If a country or bank can be instantly isolated from global trade by a political decision, that represents a serious vulnerability to that country's sovereignty. So these alternatives aren't just about technical diversity. They're also seen as a reflection of the pursuit of political independence.